All right, good morning, and thank you for attending Next Generation Trust Services webinar specifically set up for exit realty agents in the New York area. I would like to thank first Hector Castillo and any other agents I met earlier this year at the Exit Realty Conference, which was back in January. Thank you for your interest. We definitely appreciate it, and hopefully you find this webinar informational. Please, at any time, if you have any questions, you can chat them into the chat box that you see on the side there. I would love to go over any questions that you do have. Hopefully I can take them as they come. If not, we'll wait till the very end of the presentation. It should not be too long of a presentation, normally about 20, 25 minutes, and then we could take some questions. Hopefully, anyway, we can help you out. So Next Generation, we are an administrator for self-directed retirement plans. There are two main reasons why we provide this type of education to real estate agents. First is that your life is real estate, your business is real estate, and it's safe to say that you are experts in real estate. So why invest your retirement plan in the stock market or something you cannot control, something you are not experts in, when you can invest in something you do every day, something such as real estate? If you do it outside of your retirement plan, you really should be doing it inside of your retirement plan as well, instead of trusting somebody else with your money. Secondly, if agents find clients looking to invest in properties using their retirement plan funds, it taps into a much larger pool of funds that most agents are not educated on, and they are unaware they can use that money in order to invest in investment properties. And in the long run, that means more commission for you, and we all love that. So the easiest way to start is, what is Next Generation Trust Services? Well, like I said before, we are a third-party administrator for self-directed IRAs. Now, getting back, what is an IRA? An IRA is an individual retirement account, or it's an individual retirement account. Basically, it's money you put away now for your retirement, and usually you make investments in that. With most cases, it's going to be stocks, bonds, CDs, mutual funds, and other traditional investments. What we do is non-traditional investments, and we'll get to the investments a little later, but real estate, of course, is a non-traditional investment, and that's, a large majority of what we see is real estate in their self-directed IRA. When you invest in an asset using your retirement plan, you need a custodian and an administrator, and we are the administrator. We do any reporting to the IRS on behalf of the retirement plan. Next Generation is not a bank or a depository. No funds are actually held here. We do hold deeds and other assets in our office here. We are not a financial planning service. So people call up all the time. If you have a client that calls up and says, "Oh, what's the better real estate investment? What's the best market? Should I invest in, New York or Detroit?" Well, we can't help them. We can never, ever endorse or recommend, so that's for you to find them the property. The plan is completely self-directed, and is completely up to you on what you choose to invest in. So with that, of course, we ask that you do your research on any potential investment that you are going to venture into. All we can do is provide education on what can and cannot be done within a retirement plan, and give a yes or no as to what is allowable. So an investment in real estate, an investment in an investment property, is absolutely allowable, but there's some restrictions on that I'll also get to later. It's always best if there's any questions that you give me or the office a call. So there are several types of plans, retirement plans, that can be self-directed. The traditional IRA is tax deferred, so basically you do not pay taxes on the funds as they come into your retirement plan account. They're actually a write-off. But at the time you reach retirement age and you're taking a distribution, it's tax deferred, so you will be paying taxes at that point. Presumably, when you are taking out these taxes, when you're retirement age, you will be at a lower income bracket, so therefore you would be paying less in taxes. Another type of IRA that can be self-directed is the Roth IRA. That is for, you take a hit on the taxes now, you pay the taxes in this current tax year, but your assets and your earnings at that point are tax-free. The SEP is for self-employed individuals. It is the same plan as the traditional, which is tax-deferred. However, there's a much higher yearly contribution limit as opposed to the traditional. The simple is for small businesses, while employer plans such as the 401k can be self-directed. It's very rare. Usually we find that most 401ks do traditional investing, but now more and more are finding their way to self-directing. Other plans, specialty plans, are the covered L, which are for education purposes, and the health savings account, which is for medical expenses. There are several options for funding an account. You can make your yearly contribution limit. The contribution limits for a traditional IRA and a Roth IRA are $5,000. If you are over the age of 50, you are allowed to contribute an extra $1,000, so that would be $6,000 for each tax year once you're over the age of 50. The contribution limit for a self-employed plan is up to 25% of your income or $50,000, the lower value of that. The covered L is $2,000 per year. That's the yearly contribution limit. Another option for funding your account is a transfer. Those are movement of funds between like accounts. So if you have a traditional IRA with a custodian that you're doing stocks and bonds and other traditional investing, something like a Fidelity or a Wells Fargo, you can actually transfer those funds into a self-directed IRA with us, and that would be considered a transfer, and it still has the same tax advantage status. A rollover is the third type of option for funding your account. That is moving funds between unlike plans. So the most popular that we see is somebody who recently left or lost their job, has a 401k with that job. Now, it is very possible for you to roll over that 401k into a traditional IRA with us in order to self-direct those funds into making your investment. The last option is a conversion. With the economy being so bad and people just flat out making less money, they're taking a hit on the taxes for this current tax year. So they have a large sum in a traditional IRA or a 401k, and they're looking to actually convert that into a Roth IRA so that from now on they would have tax-free assets and tax-free earnings. They would take a hit on the taxes in this tax year, and then for the future, once they make their investment, it is completely tax-free. Now, that was just a little bit about IRAs. Let's get into the self-directed portion of the presentation. First, we're going to discuss restrictions on investments. There are two types of restrictions when it comes to a self-directed retirement plan. The first one is prohibited transactions. So basically, there are two things that you cannot invest in, and that's life insurance policies and collectibles. So no wines, no stamps, no art, nothing like that can be invested using your retirement plan. Those are considered collectibles. But other than these two prohibited transactions, you can invest in, it's up to you. And how I mentioned before, you cannot invest in wine. However, there are several clients of ours who invest in a company, and that company invests in wine. Our clients do not physically hold wine in their retirement plan, but again, they invest in the company which trades and sells wine. And they see it as a way of sort of getting around the system, getting around the limitation. But on our end, it's absolutely an allowable investment because the retirement plan is actually investing in the company. Now, the other restriction on investments using a self-directed IRA is any dealings with disqualified persons. This is very important for you as a real estate agent to know. The IRA holder's spouse, any ascendants, descendants, and their spouses cannot have any personal gain or interaction with an IRA-owned asset. So what does that mean? If you own a piece of property in your IRA and you're looking to have construction done on that property, anyone on this list of disqualified persons cannot provide that construction, cannot provide anything to your IRA investment. So if your father has a contracting company, he absolutely cannot do the work that is prohibited because your father, who is an ascendant, is disqualified. However, if you'll notice, brothers, sisters, cousins, aunts, uncles are not disqualified. If they have a contracting company, they can absolutely do any work on that property. Some problems we see is when an IRA holder is living in their home that are owned by the retirement plan. Again, you need to see this as an investment, strictly an investment. And the IRA holder absolutely cannot live in that property. Sometimes we see children who are renting out an apartment in the property owned by a retirement plan. Again, that is prohibited as your child, who is a descendant, is disqualified. But stepping back, brothers, sisters, cousins, aunts, uncles are allowed, as long as it's at a fair market rate, they are allowed to rent out an apartment or a section of that property, as long as it is at a fair market rate. Now we're going to go to possible IRA investments. The list is everything else. Real estate, loans, notes, partnerships, LLCs, tax liens, precious metals. The list goes on and on and on. Some of our favorites around the office, just getting off of real estate for a second, some of our favorites around the office, a woman owns mahogany trees in Costa Rica. So basically she purchased the seeds to these trees and a 15-year contract. And when the trees are fully grown and cut up and made into our furniture, that is when she will get a return on her IRA investment. So we'll see in 15 years how that works out. It's a very interesting one. Another client wanted to invest in personal seat licenses for the football team, the New York Jets, using his IRA, which is an allowable investment. We did find out that it is an allowable investment. However, he would not be able to use any of the seats, and any funds he receives would have to go right back into his IRA. Now, that particular client did not wind up going and pursuing that venture, but we found out that it is an allowable investment. Again, on all these investments, up and down the family line is strictly prohibited. They cannot even as much as step into the property to fix a light bulb. It's considered providing a service to the IRA investment, and it is prohibited. What I forgot to mention is that any service provided to the IRA needs to be paid by the IRA. So in no way can your IRA own a property and you use your own personal funds to pay for any contracting, paying for anything. Everything would need to be paid out of the IRA, and any funds, any rental income, any funds that are earned from the sale of the property would need to go back into the IRA. It's strictly for investment purposes. The person cannot see any personal gains from the investment at this current time. So you're all involved in real estate. Let's take an example of how setting up a self-directed IRA and purchasing a property would work using a self-directed IRA. Now, this is very important for you as agents to learn about in case you have somebody who is interested in purchasing an investment property using a self-directed IRA. Please take note of this slide. First, which is not listed on this spreadsheet, would be setting up your self-directed IRA account and at least funding it with enough for a good faith deposit. At that point, you would go and you would locate your investment property as you normally would outside of your IRA, where what your market is, what price point you're looking at. You can do that all outside of your IRA. However, when you're negotiating the purchase contract of the property, you would have to use the name of your IRA. It would not be in your own personal name. So in my case, it would not be Jared Lopez purchasing the property. It would be Next Generation TS for the benefit of Jared Lopez and my IRA account number. That's the name of your IRA. It's Next Generation TS FDO, the name, the IRA, and the IRA number. Once you've done that and you've negotiated the purchase contract, you submit those documents to Next Generation Trust with any deposit instructions. We send out that deposit for you. At that point, when we send out the deposit for you, you do your due diligence, any home inspection, any title search, anything you normally would purchasing an investment property outside of your IRA, you would be doing that inside of your IRA as well. But again, any funds that go out, so the purchase of the home inspection, the purchase of the title search, would need to be paid by the IRA. Once that is done, you can submit the approved closing documents to Next Generation Trust Services. We will sign the closing documents on behalf of your IRA and fund the escrow, and congratulations, you own that property. Again, any funds going in and out would need to go in and out of the IRA itself. Absolutely in no way can you use your personal funds to provide any service to the property. So that's it for us. Let me actually leave up this slide with a little information on us. If you have any questions, you can call the office, which is 973-533-1880. My name is Jared Lopez. I'll be glad to assist you or any of your clients with any questions you have at any time. If you'd like to learn more, you can email info@nextgenerationtrust.com, and we can send you brochures, we can send you links, we'll be able to answer any questions you have. But all of that is also on our website, which is www.nextgenerationtrust.com. I'm just going to leave that up for 1 second, and then we'll be able to take any questions that you have. So at this point, does anyone have any questions about self-directed retirement plans? I have a list of a few questions here. Please feel free to chat them in the chat box at this time. Do taxes and penalties apply when I take money out of the IRA to buy real estate? Well, you'll need to think of it as you're not taking the money out. So no taxes and penalties do not apply. You're not taking the funds out of your IRA account. You need to realize that your IRA is the owner of this property. So it still has that tax advantage status. Once you take a distribution, once you take any of those funds out for your own personal use, at that point there would be taxes and penalties involved. But no, when you're purchasing a property, taxes and penalties do not apply, and that's why it is fantastic to learn about, for you as agents to learn about self-directed IRAs. Another question we received, what are advantages of buying and selling real estate within your self-directed IRA? Well, basically, you are doing what you know best in your retirement plan. So if you're, as an agent, are a real estate agent and you know real estate, that's what you do every day, why not invest in real estate property? Using your retirement plan, you can always move the funds over from your current plan to a plan which is a self-directed IRA account. And instead of investing in the stock market, you would be investing in something you work with every day. But we went over the advantages. Let's go over some downsides. I don't see a real downside. However, it's not a real hands-off investment. Some people like to put money away for their retirement, invest it in the stock market, and just relax. This is not that. This is definitely a hands-on investment. You'll be making a lot of decisions regarding these properties. And if you're somebody that is looking for a hands-off investment, this is not the way you should be looking. Why does my current broker say I cannot buy real estate in my IRA? Well, that's why we're here. We're here to provide education to anybody who's interested in learning about self-directed IRAs. And if they say you cannot, they're absolutely wrong. Basically, you would not be holding the asset. It would be us holding the asset for you, any deeds, any things like that. But that is what we do on a daily basis. You absolutely are allowed to invest in real estate using your self-directed IRA. And if they keep on giving you pushback, come and ask them to talk to me, and I'll explain it to them. One more question. If I buy an income-producing rental property, what happens to the rental income? So you have a property in your retirement plan. You receive rental income each month. When the tenant sends in that rental income to Next Generation Trust into your account, because, again, you would not be receiving the funds from this account. Your IRA would be receiving the funds. It would sit in your account with us. It would sit in your account with us until you decide to make another purchase. So at any time, you would be allowed to say, I want to make another investment, but until then, it'll just sit in your account with us. We do not touch it. We do not move the cash balance of your account until you tell us to make an investment for you. The next question is, can I receive commission from purchasing in my own IRA a property? Well, no. You cannot receive commission from an investment that you make with your IRA because you would be receiving personal gains now from your IRA investment. However, if there is an agent that is not a disqualified person, and we could go back to this disqualified persons list later, if there is an agent that is not a disqualified person, they can absolutely gain commission from that investment purchase. But you personally, if your IRA is purchasing a property, cannot see any personal gains, cannot get a commission from that. But if you know any investors that are looking to purchase properties with their retirement plan, you absolutely can get commission from that, and that's a large reason why we're here today. Are there any other questions at this time? We're going to give it one more minute to see if there are any questions. Again, my name is Jared Lopez, Jared Lopez, and you can reach me at Jared, Jaredl, at generationtrust.com. I'm just going to put up the contact information for Next Generation Trust Services. Again, there's more information on our website. You can always email me with any questions you have or pick up the phone. The number is 973-533-1880. It's definitely a great source for an agent to be educated on. It gives you a heads up on top of all the other agents in the area because I am positive that a majority of them are not talking to their investors about self-directed IRAs. So anytime there's any questions, please feel free to give me a call. Thank you so much for attending. And if there's anything else I can do for you, please let me know.